We look for really first-class companies, well-managed ones with good opportunities, and we buy them and tend to hold them.
We look for financially strong companies. We want companies that can withstand the cycles.
Well-managed, good companies, well-positioned in their industry.
Whether that be a brand, a franchise, something unique. We tend to talk about a company with a high-quality business footprint.
AFIC portfolio management really seeks to provide two elements of return. One, capital growth over the long term, but also to provide a steady stream of fully franked dividends which grow over time.
In the process, we want to achieve that with security and with a proper level of diversity.
We take a long-term view of our investments. We are a true investor.
I think if you went back to 1928 when we started, you'd find BHP in the portfolio. We've still got some BHP. In fact, it's probably one of our largest holdings.
Another key element to AFIC's style of investing has always been about assessing the quality of the people.
Part of our process is really to have interactive knowledge of the company and the people who are running them.
And we'd like to get a sense of, are they really acting for the shareholders in the way they run the company, and that's very important for us.
The other side of it is that we look for industry experts outside the particular companies. The question of reducing the investment risk is a very important one for LICs because people are essentially looking for security.
We run a diversified portfolio. We'd like to make sure that we've got a range of companies covering a range of industries.
Like the financials or the energy sector or the material sector or the industrial. So you're not putting all your eggs in one basket, but you're spreading them across different sectors of the markets. One of the interesting challenges for a company like AFIC is to constantly be on the lookout for emerging companies that are going to be the blue chip companies of the future.
The investment team is out there in the market always looking for smaller companies to put in the portfolio. Smaller companies that we think are going to grow into substantial companies. We follow those stocks very closely, and as the business story develops, we continually add to those stocks to try and build the position over time.
We do a lot of research, we receive a lot of material. An investment portfolio needs to be monitored all of the time, and that's what we do. We have investment committee meetings every week.
Which includes not just the investment team but also many of the directors of the company. And we go through the portfolio each week, we look at the market conditions, we look at all the events that have occurred during the week.
We analyse the companies, we look at their financials, their ability to produce cash flows, margins, their competitive position.
The overall balance of the portfolio, we'll talk about some of the emerging situations.
We also might be looking for opportunities to add to our positions. Often times of share market weakness can provide us with a great opportunity to buy high quality stocks at discounted prices. So to do that you need to be on top of the story and to really understand the business.
One of the recent developments, probably in the last 5 years, has been the more one-on-one, face-to-face meetings with the chief executives of the various companies.
Well, in the top 20 shareholders, many of the companies that we invest in, and so they like to hear from their shareholders and also present to them directly.
Our questions we put to the company, we understand, are different to those that the rest of the market might tend to ask. Our questions tend to be more about the longer-term strategy of the business.
All the time we invite our directors to come, and you get a different type of questioning from a person who's actually run a big company from the traditional investment one. So it's a very valuable process.